All right, let's jump right in. Today, we're going to talk about a really powerful tool for traders called the Parabolic SAR. You might also hear it called the stop-loss indicator, and trust me, it earns that name.
Okay, so let's be real for a second. Every single one of us who trades has been here, right? You're in a winning trade, it's going great, you're seeing those profits stack up, and that huge question hits you. Do I sell now and lock it in? Or do I let it ride and hope for even more? And of course, there's the other side of that coin. What about a trade that's going against you? When do you finally just pull the plug?
You know, deciding when to get out of a trade, it's a total emotional battleground. You've got greed on one shoulder whispering, just a little more, it's going to keep going up. And then fears on the other shoulder, especially with a losing trade, saying don't sell now, it'll bounce back. The problem is, trading based on those feelings, that's almost always a recipe for disaster. So how do we fight back? How do you get those emotions out of the driver's seat? Well, one of the absolute best ways is with something called a trailing stop. Think of it like an automated bodyguard for your profits. As the trade goes your way, it moves up, protecting what you've earned. It's just a key part of trading with discipline, not drama.
Okay, so if we need a smart, adaptive, trailing stop, what's the best way to set one up? Well, that's where our star for today comes in, the Parabolic SAR.
So when you pull this up on a chart, what you'll see is this series of little dots. Sometimes they're below the price, sometimes they're above it. The name, SAR, is actually an acronym. It stands for Stop and Reverse. And it was created way back in 1978 by a total legend in technical analysis, J. Wells Wilder. The whole point of it is to help you see which way the trend is going, and crucially, when it might be about to turn around.
And how it works is beautifully simple. Seriously, if you see the dots under the price, that's your signal for an uptrend. Think buy, the market's pushing up. If the dots are hanging out above the price, that's telling you it's a downtrend. Think sell, the market's heading down. Simple as that.
So, the magic moment, the thing you're really watching for, is the flip. When those dots jump from being below the price to above it, or the other way around, that is the big signal. That's the indicator screaming at you, hey, pay attention. The momentum here might be about to change.
Okay, so we get what the dots mean, but how do we actually use this to make better trades? Well, the real power of the SAR comes when you use it as a super smart, dynamic, trailing stop-loss.
And here's how you do it. It's actually pretty straightforward. Let's imagine you want to buy something. Step 1, you wait for those dots to flip from above the price to below it. Bam! That's your green light, your potential entry. So you get in the trade, and right away you set your stop loss at the exact level of that very first dot. Now as the price starts to climb, guess what? The SAR dots are going to climb right along with it. All you have to do is keep moving your stop loss up to the level of the newest dot. You're just following the dots, and they're protecting your profits the whole way up. This is what makes it so cool and so effective. See, unlike just setting a stop loss at, say, 5% below the price, the SAR is adaptive. It actually speeds up when the trend is strong, getting closer and closer to the price. This means it tightens up your stop for you, locking in your gains much more aggressively. It lets you ride those big trends for as long as possible while having a smart, automated exit plan.
Now, the SAR is a fantastic tool, for sure. But here's a pro tip, and this is absolutely critical. You should never, ever use it all by itself. We need to make it even more powerful.
Pretty much every expert out there will tell you this. If you just rely on the SAR, you're going to get faked out by a lot of false signals. To really boost its accuracy, you need to bring in a teammate, another indicator to give you a confirmation, something that says, yep, this trend looks legit.
So what kind of teammates are we talking about? Well, here are some really solid combos. Let's say you get a buy signal from the SAR. Before you jump in, you could check, is the price also above, say, the 50-period moving average? That's great confirmation. Or what about the RSI? Is it above 50? That tells you there's bullish momentum behind the move. An even better one is the ADX. If the ADX is over 25, that's a huge sign that you're in a strong trend, and that's the exact environment where the Parabolic SAR really shines.
But here's the other side of the coin. No indicator is a magic bullet. And it's just as important to know when not to use the SAR as it is to know when to use it. It's got one major kryptonite that you have to watch out for.
Remember, the Parabolic SAR is a trend-following indicator. That's its whole job. So in a market that's got a clear direction, a strong uptrend or a strong downtrend, it's an absolute rock star. But when the market is just chopping around, going nowhere, moving sideways, that's when it becomes almost useless.
And here's why.
In a market that's just bouncing around in a range, the price is constantly crossing back and forth. This makes the SAR dots flip and flip and flip again. It gives you a buy signal, then a sell signal, then another buy signal. This is what traders call getting whipsawed, and it's a surefire way to rack up a bunch of small, frustrating losses.
All right, let's pull all of this together into a simple, actionable checklist you can use in your own trading.
So here's your cheat sheet. First, think of the Parabolic SAR as your tool for taking emotion out of your exits. It's all about discipline. Second, its job is to show you the trend and spot potential reversals. Third, its absolute best use is as that dynamic trailing stop loss we talked about. Fourth, and this is a big one, it only really works well in strongly trending markets. And finally, and please don't forget this, always use it with a buddy, another indicator like a moving average or RSI to confirm its signals.
So, I'll leave you with one final question to really think about. Take an honest look at your own trading. When you decide to sell, is that decision coming from a plan? Is it systematic and disciplined, like using a tool like the Parabolic SAR? Or is it coming from your gut, from that feeling of hope or fear or greed? Because honestly, the answer to that question could change everything for you.